Well, let's focus on Northern Arc Capital. They reported a strong sequential as well as a year-on-year net interest income growth in the fourth quarter. However, provisions rose, credit costs as well ticked a little bit higher. To help us out with the way ahead, we're joined by Mr. Ashish Mehrotra, the Managing Director and the Chief Executive Officer at the company. Hi, Ashish. Good morning. Good to see you in. Thanks a lot for joining in. Well, tell us, for FY26, what plans do you have for the company? What kind of dispersals are you looking at? What kind of AUM growth are you looking at?
Hey, thank you very much. Delighted to be here. If you look at it whole of last year, you saw we witnessed about 23% growth in our gross transaction volume. Our assets under management grew by 16%, predominantly driven by big focus of growth towards lending to MSME and consumers. Our forecasted, what we're looking at as this thing stabilizes, is to grow our business by about 22 to 25%. For FY26, we will taking a rather cautious but optimistic stance as the market evolves over a period of time. Obviously, there are some bit of headwinds in MFI markets where we've consciously dialed down our exposure to less than 1,100 crores. So that just speaks, that's less than 10% of our balance sheet. So we are in a good spot.
All right. So you are, scaling down some of your exposure to the MFI space. Just a couple of questions, on the outlook. While you see a 22 to 25% growth in your AUM, what is, likely to drive this in terms of sectors? And secondly, retail as a percentage or direct to customer as a percentage of your loan has increased from what, 19% to about 52%. How much is that likely to be next year?
I think we expect to take it upward of 60% over a period of time, and directionally our objective is to take it to upward of 70% over the next 2 to 3 years, and that will show an expansion in our NIMS. At the same time, continue to grow our credit solution business, which is pretty unique to what we do. Our ability to originate large amount of credit, place it in the market, underwrite it, process it, sell it to the institutional investors, to domestic investors who wants to participate in the high quality fixed income papers, invest from our asset management, from our AIF and PMS, essentially from a funds business, and support it from balance sheet. And that creates a unique fee franchise for us, and which is essentially a kicker on the numbers which we have. If you look at it sequentially over a period of time, that contributes anywhere between 80 to 90 basis point on our NIMS.
So if you could give us a sense of, every percentage increase in your D2C, how much does that improve your NIMS or how much does that improve your profitability by? So then, we'd understand that if this goes up from 52% to 60%, what is the corresponding improvement in the NIMS?
I think the way to look at it, you should see an expansion in NIM from about to about 200 basis point over a period of time as we continue to expand and build the direct-to-customer business. And that's predominantly focused towards building the secured book, addressing the needs of small businesses. We have close to 70 branches. We intend to expand that sequentially. So further build the direct-to-customer business around consumer. We work through a bunch of partnerships, both financial institutions and non-financial institutions, essentially addressing the needs and have the ability to process large quantum of credit. I think we are pretty confident as we think shaping up to see the growth in these two sectors. If you look at last year, that's the primary driver of growth. That business actually grew by about 30% year on year, while we consciously degrew our MFI exposure down to 27%.
Okay, all right. Let's talk about a little bit of the asset quality then, Ashish. Tell us about the credit costs that spiked up, and what's the outlook on asset quality for FY26?
I think the way to look at it, so asset quality, our GNPA and NNPA remained fairly well within the range point what it has been. Your credit cost has gone to about 300 basis points. That includes 2 one-timers. We did a management overlay of about close to 70 crores as part of provisioning. And the second, which is today also got covered in the paper, is the accounting adjustment on the default loss guarantee, which we thought it's prudent enough while the regulator gave us time to adjust it, to take it in one go. If you remove that, you see 60 basis point reduction from 300 basis point to about 240. And if you adjust both of them, you are predominantly in line with what probably 210 basis point, which is probably the best numbers if one looks at it.
And that is what is likely to continue as well, right? Can you give us a guidance for NIMS, GNPA and credit costs for the next year?
I think our sense is we should be able to be range bound around 240 to 250 basis point. As we grow our direct to customer business, it will come with marginally higher credit costs, but at the same time, it will have a compensating significantly higher NIM. And I think that will provide much needed tailwinds for the business.
Take that point. Thank you so much for joining in, and always a pleasure speaking with you. Wish you good luck for FY26 as we speak. With that, let's get you some ideas for profit.